morning. Good morning. This is pre-market, June 4th, 2021. It's 8:52 a.m. I hope you're doing very well this morning. I'm doing just fantastic because everything that I mentioned yesterday, the day before, everything that I've been mentioning, it's really crystallizing. I mean, it crystallizes every day as far as I'm concerned, but this jobs number, 8:30, we got the jobs number, and let's just go through that. Okay. U.S. creates modest 559,000 jobs in May, pointing to widespread labor shortages. Okay. They were expecting 671,000 jobs. And I'm not even going to go into, how I think this data is manipulated exactly. Maybe I'll get to it later, but how is the market reacting to it? Okay, so we missed by almost 20% in terms of the expected number of jobs that were created. Not only that, but they were mostly lower income jobs. They weren't really high quality jobs. A lot of hospitality, service sector kind of jobs coming through. So not a good jobs number by any means. And unemployment rate at 5.8%. And never forget that we're finding out every single week that almost 400,000 people are losing their jobs and applying for first time unemployment. So whatever. But the market reacted very positively to this news. And normally, in a real economy, when you get economic data that is worse than expected, you would expect the stock market to fall because, that would indicate that businesses aren't going to be as profitable. And usually, profits and PE ratios are what stocks are priced off of, right? No. Not in today's environment, right? So we had stock futures lower pretty much across the board before this number. Not by much, only slightly. But now, NASDAQ up 0.5%, S&P broad market up 0.4%, Dow up 0.2%, crude oil higher by 0.6%, gold higher by 0.7%, silver higher by 1%. I mean, just look at this. And so why is this happening? Well, it's again because the worse the economic data gets, the more the Federal Reserve is going to be called upon to institute greater debt and to keep doing what they've been doing for a long time now. Okay, so if let's say the jobs number was only 300,000, you would see the market be rising even more. Okay, because it's starting to anticipate the inflation. Okay, it's totally backwards. But this is the game, okay? And it's not going to stop for, well, who knows when it's going to stop, but until they can't anymore. And I'll let you know when that happens, but it's not right now. And we'll see how this plays out into the open. I think it's going to be a very interesting open to this market. I can't wait for it personally. And yeah, this is going to be really interesting. And look, if you watched my video yesterday, I told you buy this dip in gold and silver. I mean, I don't even care if they rig the prices. The trajectory is higher here. You could sell it right now. Take your profit. Who even cares? Maybe I'll take some profit here in my gold and silver. I don't know, but just this is the game. Let's keep playing it. I love it. I mean, I hate seeing the manipulation that goes on. The absolute rigging of every single facet of this market, but it is what it is. Ho'oponopono. It's a Hawaiian healing technique. It is what it is. Just accept it and play the game. So what's happening with the dollar here? Obviously getting killed because more debt issuance, negative for the dollar, and this is what the Fed wants. They don't want a stronger dollar, they want a weaker dollar. Now, they don't want it to fall too fast. At some point, it will fall very fast. But anyways, the dollar was pretty much even to slightly higher this morning. It was at 90.6 early in the morning. But right now, after this jobs number, it has dropped about 0.25 and is down 0.28%. Not a small move for the dollar, but we had that knee-jerk higher of about 0.6 yesterday. So a good movement back down for the dollar. It's going back below 90 and much lower, and that is going to put stocks, gold, silver, oil into the stratosphere. I mean, really, am I saying go all in on these things? Well, I mean, I'll tell you, I'm holding about 15% cash right now, and I'm in some fairly risky options positions. Okay, that's the game I play. Uh, what's the 10-year yield doing? It was considerably higher after the data, but now it's slightly lower, but in my eyes, fairly stable. Again, we'll see at the Open. I really want to watch the Open. I won't get it here, but keep your eyes and see how these dynamics change. And that's about that for the economic data front. There is another point that I wanted to bring up. Okay, yeah. So there's a couple of things in terms of gold and silver. So a person I follow on Twitter, and I recommend following this guy. His name is Garrick Moran, Garicmoran. He's a precious metals strategist, basically. And he posted this from the World Gold Council. Central bank gold purchases of 74.1 tons in April were almost entirely accounted for by 5 central banks: Thailand, Turkey, Uzbekistan, Kazakhstan, and Kyrgyzstan. Russia and Germany made the only notable sales, but if you look at my thing yesterday, Russia just sold all of its dollars and is going to be buying that back. Not only that, but China doesn't even allow us to know what their numbers are. I read a book, again, I've referenced this before, Currency Wars by Jim Rickards. He thinks that it's very possible that the actual reserves of China, which I think are around 1,300 tons right now, are 4 times higher than that, possibly. I mean, they buy almost all of the mining output of the surrounding companies that mine gold. They buy so much of it. And so if you do the data out, say how much are they buying, how much are these companies selling, it doesn't add up. So they must be buying more than they're actually reporting. And I fully believe that. And look, these countries are smart that are buying gold. And it's not like the Federal Reserve holds a very high quantity of gold as well. So that's that. Not only that, but people think the Fed's getting ready to taper. And I was watching CNBC this morning, and Steve Leisman was saying, oh no, the Federal Reserve it should have tapered by now. I'm surprised they haven't. Well, look, the Federal Reserve. This is on Twitter again from at TAVICOSTA, Tavi Costa. The Fed just did their largest purchase of U.S. Treasuries in almost 6 months last week. $32 billion in a single week of just U.S. Treasuries, okay? So look at that. I mean, they are just getting started, okay? The balance sheet of the Federal Reserve from the 2008 crisis went from under $1 trillion to over $4 trillion, so quadrupling of the balance sheet from the last low, which was about $3.5 trillion, it's over $7.2 trillion now, is conservative, because again, this economy, this market, this system needs ever more increasing amounts of debt. So it exponentially increases. 4 times the low estimate. I think their balance sheet is going to go at least 10 times by the time they're done. Probably more, honestly. People aren't going to really be able to believe the amount of inflation that's going to be created. And I have another article that I want to bring up. It was posted this morning, but I think I'm going to get to that in my post market. It's related to climate change and the way the Federal Reserve is using that, but that's going to take a little while, and I want to get this video out, so I'm going to end it right here. I will see you at the end of the day. Have a good one. Hit the like button, hit the subscribe button. Yeah, I'll see you.